Uh, Thank you all for coming. I'm here to talk to you about Western Copper and Gold. Western Copper and Gold has one asset, the Casino Copper Gold Project, located up in the Yukon, that we've been developing for about 12 years. Start off with a little bit of the financial health of the company. We started Q2 with around $6.5 million in the bank. We raised $3 million at the beginning of the year. That was actually the first equity that we've raised in the company since 2010. So we've been very, very good about ensuring that the balance sheet is kept very, very clean. Where are the shares? Management and board is 8%. 7 of that 8% is with our chairman, who's sitting at the back, Dale Corman. There's also a group of high net worth individuals that represent the bulk of the outstanding shares at a little under 50%. So this is sort of the headline numbers of the deposit. The top row is the reserve, the bottom row is the inferred resource. Taken together, you're looking at 18 million ounces of gold and 10 billion pounds of copper. So it's a significant sized copper gold porphyry. When we look at the revenue distribution, you can see that it's a true copper gold. About 50% of the revenue comes from copper, 40% from gold, and about 10% from moly. Looking at the production numbers, the initial production of 111,000 tons of copper per year, 400,000 ounces of gold. So significant copper gold production. You look at that size, it's important to look at the size of this because this is a size of a project which is an important size project in the copper market. So talk quickly about the copper market. People that have followed it, the copper market probably seen this graph a number of times. This is data that's actually put together by Wood Mackenzie. This is Rio Tinto's version of it. But really what it's saying is that in the next decade we need 5 million tons of additional copper. When you look at that, look at Casino, which is a fairly large mine, 65 mines the size of Casino. I've been showing this graph for a little over a year, and you know, people I go back to say, well, Paul, this is all nice. When is this actually going to happen? It's happening now. You know, here are headlines from the past couple of months. You're seeing a lot of attention on copper, a lot of talk about the fact that we're entering the supply deficit. And you look at this supply deficit and you sort of take a look at where is this additional copper going to come. You know, we went out and we took every single copper project that had at least a PEA that was listed on the TSX and TSX Venture and controlled by a junior mining company and put it onto this map. There's less than 20 dots on that map. A lot of those projects aren't economic. A lot of them are too small. A lot of them are in jurisdictions that aren't very favorable to mining. So, you know, the takeaway here is that we're entering this copper deficit. Good copper projects in good locations that have, you know, the adequate size and good economics are really rare beasts. Last thing, I talk a lot about copper. It's important to talk about gold as well. 18 million ounces of gold puts us in a pretty select group. And then in terms of gold equivalent, when you combine the copper and the gold and talk about that in terms of gold value, we're actually bigger than Donlin Creek. So those are sort of the key takeaways. So talk quickly about the project here. Start off with the team. We've got, Dale's been in the industry his whole life. Big win was with Western Silver, which was sold in 2006 for $1.6 billion to Glamis, and we spun out of that transaction. Other key guy up there is Cam Brown. Cam spent the bulk of his career with Bechtel Engineering, and importantly was project manager for the Los Pelambres mine built by Antofagasta. Looking at the timeline, 2006, we spun out of the Western Silver transaction. That was the beginning of 2006. End of 2006, we acquired Lumina Resources. So this is another Ross Beaty copper project that we're working on here with the Casino project. We took that, we de-risked it. We finished off the drilling, did 2 pre-feasibility studies, a full bankable feasibility study, brought it into permitting. Right now we're about halfway through permitting, and we're essentially 3 years from having this project fully permitted. This is a cross-section through the deposit. So starting from the top and working down, at the top of the deposit is enriched in gold, depleted in copper. It's 160 million tons at 0.3 gram per ton gold. That's removed, starts 2 years early, mined off and goes on to a gold heap leach. Beneath that in the light and dark orange is the main copper porphyry. That's 965 million tons at 0.5% copper equivalent. Key to that, though, is the first 4 years. If you look at the first 4 years, which is shown there in the light orange, that's actually 0.7% copper equivalent, so quite a bit higher grade. All that, the orange and the yellow is the reserve. Beneath that, in the blue and the red, is the inferred resource. The reserve is a 22-year reserve. You can put a pit around the inferred resource as well. It just doesn't have the drill spacing to be included in the reserve. Putting a pit around that brings it up to 55 years. So we already have a half century of ore established here. And if you look at the area, and this is just some geophysical anomalies that are nearby, you can see if there's potential, additional potential there as well. So, we have a half century of ore identified, and we expect that there'll be a lot more there and be mining there for years to come. This is what really sets this project apart from a lot of those other copper projects that I showed you on that map. I mean, the economics on this project are absolutely stellar. I mean, at $3 copper, $13.25 gold, this project has a 25% after-tax IRR and close to $3 billion net present value. You think those are too aggressive numbers? Fine. Look at this thing at $2 copper and $1,000 gold, and you still hit that 15% benchmark. Of course, when you look at the top of the last cycle and copper over $4, you're looking at a $4.5 billion net present value on the project. Why are the economics so good? I've sort of highlighted a couple of things and circled them there. One is that early high grade, that 0.7. The other key factor that leads to the good economics is the strip ratio. 0.59 to 1 life of mine strip ratio. There's no pre-strip on this. Those are the things that dictate the very good economics that we see with the project. Looking at costs, most people report cash costs in terms of net of byproducts because of the split. I mean, you can look at our net of byproducts costs. They look very good. They're both big negative numbers. Probably a fairer way to look at this is actually the co-product cash cost. On a co-product cash cost, $1.43 per pound of copper, $633 per ounce of gold. So those are about half of what those commodities trade for right now. So, very, very good cash costs on the project. Capital, $2.5 billion. So this actually puts it in terms of copper projects in sort of a mid-size copper project and a mid-size capital cost. But importantly, and this is showing data taken from Goldman Sachs, looking at various greenfield projects, and what it's showing is capital intensity. So on the left of that chart are a bunch of cheap projects, and on the right of that chart there's a bunch of expensive projects. But really, most projects come in around $15,000 per annual ton, and that's essentially exactly where we come in. You don't get mines built without social license. We're very proud of the work that we've done up in the Yukon, making sure that people understand the project, that we've got the First Nations on side, that we've got the community on side, that we've got the governments on side. All that good work really accumulated September of last year. That picture was taken up in Whitehorse. That's our Prime Minister, and who hopefully some of you guys recognize, and the other guy is the Premier of the Yukon. They were in town to announce a major infrastructure package for the Yukon. 3 roads. One of those roads is the road to our Casino mine. So if you look at that road starts at Carmacks, goes up to Casino. The first half of it is 100% funded by the government, and the second half is 30% funded by the government. So a lot of work, a lot of lobbying, a lot of getting everybody on side to get this come forward for us, but obviously a very nice shot in the arm. Last thing I talk a little bit about, I mean, the Yukon's been in the news a fair bit, been a lot of M&A up in the Yukon. The Yukon is a big place. The key thing to keep in mind is that M&A has been happening right next to us. When Goldcorp bought Kamnak for the coffee project, that was the project to the west of us. When Kinross and Agnico put together the White Gold company, that's directly to the east of us. So those are sort of the key facts. This is a very solid project in a good location, entering a very, very hot copper market. Our goal this year is to get a partner, and that's what we're going to do. Thank you.